Hi, welcome to Diaries. I'm Tia, this is Michelle, and on our channel, we share tips on how to build wealth through real estate. Also, subscribe below so you can hear real stories from real investors working on real deals.
And today's episode is top 5 things you should know about commercial real estate loans.
Thanks, Michelle. So our number one is going to be commercial lending. And commercial lending is going to come from your traditional credit union, bank, or other traditional lender. And they lend on commercial properties such as retail or office space or multifamily 5 units and up. And the length of a commercial loan is basically going to be 15 to 30 year repayment plan. And your repayments towards that loan are going to go towards your principal and your interest. And with this, to qualify for a traditional loan, they're going to look at your credit score, your stable income, your debt to income ratio. And these loans are pretty much widely available and easy to access. And that's why everyone typically taps into this. Also, you can do mostly a down payment between 25 and 30% as well on a traditional commercial loan.
Awesome. So number 2 are SBA loans. Small Business Administration loans are government-backed loans that help businesses get financing to purchase or refinance commercial property, more specifically owner-occupied loans. And so small business loans are really great because you can take advantage of their lower interest rates, and they typically demand a lower down payment when getting an SBA loan. Now, business must meet the minimum requirement for the business. So they're going to want to see that you're operating in the U.S. and they're going to look at your cash flow. They're also going to be looking for a solid business plan and that you're somewhat established as well, too. And, SBA loans can also be used to purchase, equipment, as well as working capital or refinancing existing debt. And then there are different types of SBA loans, such as the 7A loans, the 504 loans, and micro loans as well, too. So be sure to look at our description below to get more details on how you can take advantage of SBA loans.
Absolutely. And number 3 is going to be a bridge loan. And bridge loans are typically short-term loans that you would use to finance a commercial property before you get permanent financing or pay off the property. And these loans are really beneficial because they tend to be quick and easy, fast loans. So when you think about qualifying for the bridge loan, they're going to use the property as collateral. So it's not so much focused on you as an individual to qualify for this loan. And these loans typically are about 12 months long and they're interest only payments. But one thing to keep in mind is that at the end of the 12 months, it's usually a balloon payment. So they expect you to pay it off or to potentially refinance out of that property as well. The other thing is a lot of times they're interest only throughout the 12 months that you have the loan. So another thing to consider is the fees on this. The fees and the interest rate tend to be a lot higher just because they're easier to access these loans. But overall, it's a great opportunity if you're looking just to transition into a more permanent loan, but need to take a property down quick and fast, within a week to a month.
Absolutely. And number 4 would be construction loans. Now, construction loans are another great option to get financing if you're looking to build a new construction or rehab an existing commercial property. Usually construction loans are dispersed along several phases along the construction project. So you don't get all the money all at once. But as you meet certain criteria along the project, they'll disperse the funds that you need or reimburse you for the funds. So therefore, you're only paying interest on the money that you have received so far. So definitely construction loans are a great option if you're looking to maybe take an existing commercial building that needs a ton of CapEx. You just need to completely just rehab it. Or if you want to just break new and break ground on a new deal.
Number 5 are mezzanine loans. And mezzanine loans are basically a hybrid type of loan. So generally you have your senior debt and you have the equity. And mezzanine loans will be the hybrid loan in between those two. And the reason someone would get a mezzanine loan, and they're mostly for businesses, especially businesses that are in the business of real estate, and they're looking to expand in potential mergers or acquisitions or management buyouts, they'll use this type of loan. And the reason that it's attractive is a lot of times people that own these businesses and they're looking to do this expansion, they don't want to give up their equity, right? So they'd rather pay a little bit in higher fees and interest to get this short-term loan in order to expand and buy more properties. Now, the difference between this and the bridge loan is the bridge loan is backed by the collateral of the property, whereas a mezzanine loan is backed by the collateral of the equity. And if you are to default on a mezzanine loan, now that lender will actually have equity within your company and owning that. So these are very good loans depending on what you're looking to do as far as expansion and not give up as much equity, but just be sure to make sure you understand the terms, conditions, and negotiate, that on your behalf in order to use this to grow your business.
Absolutely.
Yeah.
Now, of all these lending options, I know we have another story for the Door Diaries. Yes. So Tia, why don't you share an example of when you guys used a bridge loan?
Yeah, absolutely. Yeah. So, just a few months ago, we were in what's called a seller's market, right? It was very hard to, compete basically. And clients were going out there, they're putting in offers and they're just getting bid out, right? And I mean, I'm having clients that have 50% down and that's still not standing up against cash offers. So, I had a particular client that knew that she was going to sell her property in about 6 months, but we were looking for a multi-unit at the time. And so what she decided to do is to get this short-term bridge loan. And with that, we were able to compete at a much higher level. So we were able to go in and say, basically, we're going to offer cash on this property, even though part of her loan was actually being funded with a bridge loan.
Right.
And we went in, we're able to offer cash, do a 2-week close, no appraisal, and really be able to compete in the market. So this is one way that you're able to use these type of loans. And of course, in a few months when she sells her other property, she'll just pay that off. And now she'll have a completely paid off asset that's cash flowing.
Absolutely. Yeah. You got to have, bridge loans as part of the toolbox that you have when trying to put some deals together. So that's good.
Absolutely.
Yes. And as a thank you for staying towards the end, we do have a bonus tip. And that bonus tip is to network with more private money lenders. Now, with private money loans, you can definitely get those kinds of loans for commercial properties. They usually come from private individuals or private companies or groups that are willing to lend out their personal money to help finance your deals. Now, private money loans could be helpful, especially for maybe looking at a building that normally would not qualify with a conventional lending institution, or maybe for some reason you're under contract and you're in a tight squeeze and you got to close quickly and your plan A financing option fell out. So a hard money lender may come in and save the day. Mm-hmm. So there's various reasons why you may want to get private funding to purchase those deals. And so, or even fix those deals. And so the interest rates are typically higher. You typically have to pay more points to compensate those individuals or private companies or private groups for those financing. But again, it's another toolbox to have, another tool in your toolbox to have if you're looking to finance deals and put deals together.
If you're looking to get started in real estate or you're looking to buy or sell, make sure you check out our website at Door Diaries RE below, and we will connect you with a real estate advisor in your area.
See you next time.